Hello. Hello, guys. Good evening.
Good evening.
Welcome to today's meeting. Uh, I hope we all understand the previous concepts so far.
Yeah, so far so good.
All right. All right. So we'll move on to the next thing very quickly. So today we're going to talk about uh, how the how the market switches between the four phases that we've discussed earlier. So we've discussed reversals, retracement, impulse, and consolidation. All right. So today we want to discuss how the market can move between these phases because when you are trading, the first thing you want to know is where the market or where the price will go next and why it's going there. So if you know what the where the price is going to go and the reason is going to go there, the next thing for you is to find an entry. All right. So the entry is the second most important thing. And after finding your entry, you must decide how much you are willing to risk and if and risk what is expendable to you. All right. So um for us to actually decide what you are going to do at each point in time while we're in the marketplace, what for us to decide what we're going to do, we need to understand how the market moves between every of these phases. So if we're in a consolidation, what is likely to happen next? If we are in uh a reversal, what is likely to happen next? If we're in a retracement, what will happen next? If we are in an impulse move, what will happen next? All right, so that's just basically what we'll talk about today. And if we have time, we'll move on to the next topic, which is institutional sponsorship. I hope that we do have that time because I want to discuss a few things there before we move on, so that I can give you assignments because I'm not sure I'll be able to give assignments with just this topic here. All right, so now we'll go to yeah. So I'm just going to make an illustration. So what we're trying to find out is how how price moves between the four phases. So that's what we're trying to find out here. That big, that here. Yeah, so basically this is our topic for today. So now let me write down the four phases that we've discussed. So we discussed the consolidation, we discussed that, retracements, reversal, impulse. So yeah, these are the four phases. These are the four phases that we have. I'll just put them If you have watched an ICT mentorship video before, you would have seen something like this. All right. So um, these are the four conditions that the market can ever be in. So anytime you just look at the charts, it's going to the price is either going to be in a consolidation, or it's going to be in a retracement, or in an impulse, or it is in a reversal. All right. So now the price can go from, so every time it starts with a consolidation. Consolidation is just the beginning of usually anything that is happening in the market. Why? Because consolidation is where we are trying to decide where the price will move to next. Okay, so if we are going to go down next, we will start from a consolidation first. The consolidation will start first, then everybody will be deciding, am I going long or am I going short? So when everybody now, or when most people now decide that is the is short we are going, then we'll move to the impulse. All right, so we can go from consolidation to impulse, but consolidation always starts everything. Okay, everything always starts with consolidation. All right, so from an impulse we can move to um a retracement. All right, so that now let me give you guys a graphic picture of what I'm saying here. So let's say we have a consolidation. So this is indecision. Nobody knows what will happen next. So say we decide to go up. So we have an impulse. An impulse can happen after a consolidation. All right. So an impulse can happen after a consolidation. A reversal cannot happen after a consolidation. So let's just say we've had an impulse. All right. So we've waited the consolidation. The next thing that happened was an impulse. So after an impulse, a retracement can happen. All right. So we might go into a retracement like this. So the next that may happen is something like this. It retraces. All right. It retraces back down. So that could be a scenario. Okay. Another thing that can happen is that from that impulse, we can go back to a consolidation. All right. So we can move from consolidation to impulse, and we can also move from impulse to consolidation, because sometimes after an impulse, you may not see a retracement. What you may see is another consolidation. Okay, what you may see is another consolidation happening here. All right, so that might be what happens. So whenever you see an impulse, what will happen next is either a retracement, or another consolidation, or a reversal could happen. All right, a reversal could happen after an impulse. A reversal could happen. All right, so let's say, let me draw the picture for this now. So let's say we have a consolidation, then we had an impulse. All right, so after this impulse, so that means if we had an impulse to the downside, that means the trend is bearish, it's a downtrend. All right, so and the impulse always goes in the direction of the trend. So after an impulse, we could have a reversal. So we could have something like this, boom. All right, so we could have something like that.
Children,
Yeah.
sorry to disturb you. Import is import the same time expansion, Abi?
Yes, 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 yeah. So we could have a reversal happening like this. So that means that we took out the strong low of the trend and we are starting on that trend. So if we have a reversal like this, that means that this move here, it has started a new trend. All right, so that started a new trend. Now, so for that new trend, what can we call this leg here? What can we call this leg? So we're in a downtrend before, we had an impulse leg for a downtrend. Then we had another leg going up as a reversal. So what kind of leg is this one that goes up? Can somebody give an answer?
I think it's also an
Impulse.
impulse leg.
E-
Impulse leg.
Exactly. So this is also an impulse leg for the new uptrend. So after this impulse leg, what can form is either a okay. After this impulse leg, we can form a retracement. All right. So we'll be expecting a retracement or a consolidation. Okay. So let's say we have a retracement. Right? After a retracement, what we expect is another impulse. All right? What we expect is another impulse. So we can move from a retracement back to another impulse. All right? So we can move from retracement to impulse. All right? So we move from impulse to retracement, from retracement to another impulse. All right? So that's how it works. Let me see. From reversal, we can go to a retracement, all right, and after a retracement a consolidation can also happen. All right, so now let's go to the chart. Let me first take a screenshot of this thing so that you guys can reference it later. Let me take um a screenshot first, or let me make it bigger. All right, so I'll open this image. So basically, this is what we say are the possible scenarios. So now, if we switch to a chart now. We switch to a chart. All right. So I'll now delete the drawing from here. All right. So now we're observing this, trying to find out what is happening and what is happening next. So we're using this thing as a guide. All right. So we're using this thing as a guide. So basically, what I want you guys to understand from it is that you guys should know or learn um, where can the market go after something happens. All right. So let me say you find yourself in a consolidation. You immediately know that the two possible things that may happen after that consolidation is an impulse. An impulse can happen after the consolidation. All right. So, and if you're in a retracement, you know that after that retracement, You either have another impulse or you have a consolidation. All right. So consolidation goes to impulse, and impulse can go back to consolidation, or it moves to a retracement. Once we're in a retracement, we can go back to another consolidation, or we start a new impulse leg. All right. So from that new impulse leg, we can either have a reversal or another retracement. Okay. Or a consolidation. But let's assume that we had a reversal. After that reversal, what we are going to have is a retracement. All right. So after that retracement, we might have a consolidation or something else. But now let's just follow the price action with these templates now. So here we have an impulse. All right. So we have an impulse leg. All right. So what happens after the impulse leg? We have a retracement. We have a retracement. We have a retracement. All right. So that is following this one now. From an impulse leg, we went to a retracement. That is this arrow here. All right. So after that, we now had another impulse. All right. After this impulse, we had a short consolidation, or should I call it a consolidation? This looks, let me just categorize this as a retracement. Retracement happened here. After retracement, we have another impulse. All right. So after that impulse, we have another retracement. After retracement, another impulse. After this impulse, we have a reversal. So the price can go from an impulse to a reversal. That's a possible scenario. So that can totally happen. All right. I thought somebody was trying to join. Okay. So after this reversal now, we are having a retracement. All right. So this thing moves like this in circles. All right. So it's not compulsory that you cram all these things. All right. But you can refer back to this video later on if you are trying to find out where the price action may go, or you can just put this drawing inside your book or something like that. But I don't really think you need to draw it or anything. Just have it in mind that these are the only four conditions that can happen in price action. Only these four things. Okay. So whenever you look at the chart, it is going to be in one of these phases. So just determine the phase that you are eyeing. I mean, just determine the phase that you are observing. All right. So once you determine that phase you're observing, you would now know which are the possible things that may happen after that. So that means that if you just join the market and the price is flying up, all right, you would immediately know that after that flight, it's either you have a consolidation or you have a retracement. So those are your two scenarios. Or sometimes if you've had several impulse legs, you may have a reversal, but most times it's either we have a retracement or a consolidation. So after that one, you will now know that you have another opportunity to buy. But if the retracement fails or the consolidation fails to start under impulse, you know that you are in a reversal. All right. So I will send you guys a video from the inner circle trader concerning this. It's just a very short video that would explain it in a little bit more detail that you can easily keep to yourself, because this recording is going to be long. I think that video is like 20 minutes. So anytime you want to try and remember this, you can just look at that video and update your knowledge. All right. So that's the purpose. So basically, this is how the market moves between the four phases. I'll drop this image in the group, and I also drop the ICT video. ICT is the inner circle trader, is like the the one of the main uh producers or developers, or how will I put it, creators of the smart money concepts in trading. All right. So there's the retail, people usually call it retail concepts. All right. All these indicators, trend lines, support lines, resistance lines, and all that. And then there are those people that use other things like liquidity runs, liquidity concepts, manipulation, all these other things. So it's kind of like two segments in the trading world. Both of them actually work. Okay, none. I will not say one is better than the other, but um, basically, what most people are gravitating to is that they learn smart money concept because what it helps you do is that it helps you understand some of the manipulation that happens in whichever market you are trading in. Manipulation happens in all markets, whether you are in synthetic indices to crypto to stocks to forex, everything. There's manipulation there. So these concepts help you understand these manipulations. All right. So um I would drop a link to his YouTube channel. All right. Some of you are already familiar with these concepts, but if you aren't, I'll drop a link to his YouTube channel and any of his concepts or any of his videos that I would like you guys to study. I will just send it to you guys. He was very, very instrumental in my development as well. So I think it will help you guys too if you guys learn um from the guy. All right. So do we have any questions concerning this way of how the market moves between these phases? Any questions concerning that? Okay, no questions. All right. So we will move to um institutional sponsorship. All right. Institutional sponsorship. Institutional sponsorship. All right. So now, let me tell you guys a bit of um what is usually happening in the markets. All right. So um so price is always moving to take out liquidity or or let me not use the word mitigate or retrace to a point of interest, right? So price is always moving to take out liquidity or mitigate a point of interest. Now, what is liquidity? What is liquidity? All right. So liquidity is basically a pool of orders, all right? A pool of orders. So a place where many people are looking to get involved in the marketplace. All right. So now, how can you identify liquidity? Liquidity is simply your support and your resistance or turning points, previous turning points in price. So for example, you can have this place as a turning point. So price change direction there. All right. So this place is a turning point as well. Price change direction here. Okay. So turning point as well is here. All right. So um and that turning point you can say is maybe somewhere here. All right. So turning points are just support and resistance. All right. So you can hit here, it says the support, then it turns around. things like that. So that's your liquidity. All right. But first, let me just take it step by step, like we have it in um this area here. So now we'll go to other blocks. All right, other blocks. So what is an order block? What is an order block? What is another block? Um, what is an order block? Another block is a, let's see, is an area in price. So you guys should be able to, if I'm making small errors, I'm pulling all this things out of my head. I did not, I don't usually study before these sessions. I just teach from my mind and what I know. Right. So another block is an area in price where there was a lot of buying or selling or selling previously. Okay, previously, previously. This means that this was probably the beginning, beginning of an impulse move, right? So price usually usually turns to this area before resuming resuming the trend. Okay, so price usually returns to this area before the before resuming the trend. So um let me say, should I call it types or kinds? Let me just call it kind of order blocks. Order block, an order block is either bullish or bearish. That is, it's either causes an upward or a downward movement in price. Okay, so now how can we identify other blocks? Other blocks. How can we identify other blocks? All right. So um bullish other blocks, other blocks are the last bearish candle, or let me say down candle. Put in brackets red candle, right? So all those red candles that go down, right? Okay, those red candles that indicates downward movement. So they are the last down candle, red candle, before an impulse leg happens, right? So Um, bearish bearish order blocks are the last um up candle. Up candle is the green candle before the um okay before I said bullish order block before upward an impulse leg an upward impulse leg. It's an upward impulse leg or impulse move. Let me use a move here. The bullish order blocks are the last down candle, that's the red candle, before an upward impulse move happens. While the bearish order block is the last up candle, the last green candle, before an before a downward before a downward impulse impulse move happens. Right? So yes. So if we have if we have an impulse leg, we usually expect price to return to the other block formed before it started sometime in the future. Right? So sometime in the future. Okay. Let me stop with all the theory. Expect the price. Okay. So let me just read through before we go to the chart. So we said, what is an order block? Another block is an area in price where there was a lot of buying or selling previously. This means that this was probably the beginning of the impulse move. Right? So when a lot of buying happens, we have an upward move, but when a lot of selling happens, we have a downward move. So the point where that happens is the candle just before the upward or downward move happens, and that is what we call our order block. So price usually returns to this area before resuming the trend. Kinds of order block. Another block is either bullish or bearish. That is, it either causes an upward or downward movement in price. How can we identify other blocks? Bullish order blocks are the last down candle before an upward impulse move happens, while the bearish order blocks are the last up candle, okay, before a downward impulse move happens. If we have an impulse leg, we usually expect the price to return to the other block formed before it starts resuming before it started sometime in the future. Okay, so let me just check the chart now. All right. So now let's look at the chart and look for other blocks. All right. Let's look for other blocks. Let's look for other blocks. All right. So now we have we have this price moving up here. All right. So this last this last red candle here, this one right there. Okay, this one you can regard it as a bullish order block. All right, so you can regard it as a bullish order block. The last down candle, you can call that a bullish order block. All right, so we extend it out in time, and we expect that when price returns to it, we may look at other factors and determine whether I want to buy from there. Okay, so now let's look into the trend and find other smaller ones. All right, so look at this one. Look at this one now. Okay, look at this one. The price went above it. Okay, let me go back to the definition just to solidify this thing. Let me go back to the definition. So we say bullish order blocks are the last down candle, red candle, before an upward impulse move happens. So this is an upward impulse move. So the bullish order block is the last down candle before we have the impulse move, right? It's the last down candle before we have that impulse move. And let me assume that we have a supporting price. Let me say this price is a support. Let me say this line is a support, all right, and price is coming down. Price is coming down like this, all right. Price is coming down. Let's see. So price is coming down like this, all right. So at the point when it hits that our support, we'll be looking for um some movement to the upside because we expect price to go up when it hits a support line or a resistance. We expect price to come down from a resistance. So once we hit a support like this, we're expecting price to go up. So let me assume that we have a down candle right as we hit the other block. Sorry, right as we hit the support line. All right. So let's say we have a down candle. Let me make this red. Um, make that a red rectangle. So let's say that's our bullish order block. Okay. Once we hit this place, this is our support line. Okay. That candle is not yet a bullish order block. All right. So the point when it becomes a bullish order block is when we have price going above it. All right. So once we hit the support line, all right, and price goes up and goes above the previous down candle, that the last down candle that hits the support line, all right. Once we go above it, that candle is now validated as our bullish order block. So we can expect price to come down later, expect price to come down later on, and that bullish order block will act as the next place where we should buy from. So it now acts as a um support line. So that bullish order block will be where we'll buy from next. So we expect price to come down like this and touch the order block area before a new impulse will happen and our new uptrend will continue. All right. So once price goes above the bullish order block, all right, once price goes above the last candle after hitting our point of interest, all right, so once price goes above it, it is now validated as a bullish order block. All right, so let's go back to our example in the price action that we are talking about before. All right, so if we zoom in like this, all right, we zoom in here looking at these examples. All right, we have this last down candle here, price goes above it. You can see price went above it a little bit, came down into it, and now it's acting as a support, as a new place for us to buy. And once we touch it, price continued the send forth. All right. So after we touch it, we formed another order block there. All right. So very soon you'll be learning which order block to use. Okay, but it's not now. Just understand the concept for now. So once we create another impulse move, this guy will be a new order block. So we'll be expecting that if price later should later come down to touch it, there will be some kind of movement from there. All right, there will be some kind of movement. So we can see price touch it here a little bit, touch it here as well, and even later on, much later, we still touch that same order block, and the trend continues. All right. So the trend continues, right? The trend continues. just going on like that, like that, like that. All right. So um you can see everywhere they occur, everywhere. Like what I always say, that price is fractal. Okay, if you go on any time frame, you can see this thing happening. All right. So you can see here as well. This is the last down candle, then we move up. All right. So once we went above it, that is a valid order block. So once price comes back, it's a good place to buy. All right. It's a good place to buy. Now, this thing I'm teaching you here is not enough for you to go and start trading. No, I did not send you message. All right. It's not enough for you to start trading. It's not enough for you to start trading. Don't go and say, hey, CGI has taught me other block. Any other block I see, I'll start buying from there. It's not every time you buy an order block, all right, or you sell like a bearish order block. Look at this one now. You can also see here, even though it's not, you may not see it very clearly, but this is the last down candle before this move started. Look at this previous order block here. When we came back down into it, we started climbing. All right. So the new latest down candle that we formed here, price has traded. Please mute yourself so that everybody can hear clearly. All right. So this last down candle here, when price comes down into it, there was another down candle. So this place is acting as a new support area. All right. So there's another down candle that formed, and we can draw it out as our bullish order block as well. Can draw it out. You can see price came down here. You can see this wick. So it lasted a very very short time inside this order block. Very very short time before we continued climbing again. All right. Before we continue climbing. So um the other block is very very powerful if you later learn where to use the other block and where to avoid it. All right. So when you learn how to select the other block you're using, like for example now, this other block failed. You can see this other block. Even though when price hit the other block, it went up a little bit. If you see, you can see we have some green at that place. So it went up a little bit, but eventually failed, right? Because a reversal was happening or something like that. All right. So the going back to the definition, the bullish order block are the last down candle before an upward impulse move happens. All right. So now we move to the bearish order block. So the bearish order block is the exact opposite of the bullish order block. The bearish order block is the last up candle, the last green candle before a downward move happens. All right. So if you go to a chart now, okay, and you look for a downtrend, you look for a downtrend. So you try and find. So this is a downward move now, right? So you try and find the last up candle before the downward move happens. So I can count these two as another block, all right? Even though these are not the real other blocks, right? The other block is up here, but you've not yet gotten to this type of other block. It's we will still teach it later when we go to that is like a rejection block here. All right, so you learn the various type of other blocks later on, but we'll not use all of them. We'll just be using these four most times and normal one. Okay, so basically we can count this area as the area of our bullish order block. All right, so price came in there and continued down. Let me know use this example because there's a wick there. Try and avoid where we have wicks. All right, so we are looking for the one that is just the body, or the body is the highest. All right, so that means the last thing that happened before the new downtrend is a green candle. So look at this example now. All right, so we have price making a bearish order block there, the last up candle before we fell down, the last up candle before we fell down, the last up candle. Look at it. Mm. All right, so this is the last up candle before we fell downwards. All right, so is acting as, so we can call that um our bearish order block. Bearish bearish order block. Sometimes when people are marking this in on their charts, they call it minus OB and plus OB. So a bearish order block, they call it a minus OB. Sorry, let me make that font bigger so you can see it. 28 um inside center. Right, so this is our bearish order block that happened here. Okay, so price came down and later still came back to test it before we continued the downtrend. All right, so price later came to test it. You can even see this one, even though I will not really advise this one because it's not exactly what worked in this scenario, but let's just use it for the purpose of this lesson. All right, so what happened here is an imbalance, but we've not gotten to that stage. But let's just use this as another bearish order block. Okay, and that bearish order block. All right, so we keep on moving and we see more and more and more happen. This one, you can call it the same thing, a bearish order block. All right, so price touched it once. I don't know. Yeah, so we have that one as a bearish order block. We have another one here. All right, that one here. This one failed. All right, that one failed. That one failed. Okay, so if anytime we're in the downtrend, we're looking for the bearish order blocks as a place where we want to continue the sell, as a possible place where we would like to continue the sell, a possible place where we would like to continue the sell, possible place where we would like to continue the sell. All right. So the last up candle before a downward impulse move is a bearish order block. The last up candle before the impulse move is a bearish order block. Okay, so um I think I will wrap up the lesson here. Tomorrow we'll talk about the what do they call it? The main threshold. The main threshold and what it means. Okay, what we call the main threshold. For anybody, does anybody have a question before we round up today's lesson? I don't want to have a headache right now. I was working to throughout today. Any questions concerning other blocks? Hello?
TJ,
Yeah.
when we talk about that imbalance, when you say imbalance before, when we talk about imbalance, it's not on the what outline.
It's not there. We have imbalances here now. After other blocks. That is
Okay, that's
tomorrow's,
tomorrow. Okay,
yeah,
tomorrow. So,
tomorrow's lesson.
okay,
We have imbalances.
okay,
Yeah.
okay. Huh?
Any questions? If you have question, please ask. Okay. It's like this people understood this thing very well. So
Ah,
okay, somebody's asking a question. Lillian, what's up?
please, fine. Please, can you help me explain that liquidity? But I don't get to
Da,
liquidity.
come again.
Liquidity. What you said about liquidity?
Okay,
I didn't get it.
okay. Liquidity. I said liquidity is just, even though I've not really got into it, that's why I didn't spend much time on it. I said anywhere that we have a turning point. Okay, So let me say the price was going up and suddenly it turned to the downside. So let me say from here now we turned to the downside. Okay, that shows that there were a lot of people that sold in that place. So that place can act as liquidity. Now, what liquidity does is that it attracts price. Okay, it attracts price because if a lot of people sold here, mm, this place can be a point of it can be a place where people will set their stop loss. So let me say I sold here, all right, and the price was moving downwards. Okay, where I'm going to have my stop loss is around that point that I sold. So I may put my stop loss in front of it a little bit. So if you don't know what stop loss is, your stop loss is what will stop your loss anytime the market is going against you. Okay, so is that I'll put my stop loss a little bit above it, or if the trade has gone in my favor, I'll put it in front of it so that no matter what happens, I'm still in profit. So that place acts as liquidity. You can see how the market just went above it to remove those people that are in the marketplace. So some people are successful now, they are smiling, they are in the sell, they are very, very happy. But the market makers are very cruel people, they are very wicked. So they don't want you to make money. Okay, so they will go out and unseat those people that are in the right trade, all right? They're in the sell trade. So they'll go up there and take them out. So some people have their stop loss there, while there are other people that will put a buy stop. So what is a buy stop? A buy stop is an order that will put you in a buy once price goes above it. So let me slow down a bit. A buy stop is an order, is a pending order. I think I explained it in that resources folder. It's a pending order that once the price goes above that order, or once price hits that order, the market will put you in a buy trade. So some people want to buy here. Why would they want to buy here? Okay, they want to buy here because since let me show you their thought process now. Let me tell you how they think. Okay, since this is a place where we sold, right? That means that there is a resistance there. There's a resistance. So price doesn't want to go above that place. Okay. So if there's a resistance there, anytime that price finally goes above that resistance, that means that the trend has changed. Okay. So if we have a resistance before, all right, we have a so all these ones that go up are resistances. So price doesn't want to go above them. But once price finally goes and break above a resistance, that is a sign that we are now in a new trend. So some people may want to buy there, okay, but they don't have much knowledge on how to buy, when is the right time. All right, so they may go and buy carelessly. New traders, they just buy anyhow. All right, so once price goes above that resistance, they will be put in a buy trade. And once the price reverse like this, they are in deep loss, they are in soup, they are sweating. All right, and the account is blowing. Okay, if by the time the price gets down here, the account may have blown already. You understand? So the liquidity is just a place for um the orders to either force some people out of the market or force some people into the market on the wrong side. So that's liquidity. We've not gotten to liquidity properly. All right, liquidity is probably Wednesday's topic, liquidity pools. All right, but liquidity is just basically where we have a turning point in price action. All right, do you get at least a little idea of what I'm trying to explain?
Yes, it's fine.
Okay, so liquidity is not really the topic for today, Sha. I just want us to understand other blocks today. Tomorrow we'll talk about imbalances, and the next day after that we'll talk about liquidity pools. All right, so any question on other blocks? Okay, no questions. So we'll have, let me name this thing as today is day what? I think day seven, day seven notes. Okay. So um Assignments. Assignments. Um, use use the rectangle tool. Rectangle tool to mark out 10 examples of bearish order block that worked, right? The one that worked though, that works. Like I mark some here. I showed you some examples here that did not work out, like this one that failed. All right. So find me the ones that worked, like this guy that worked here, that the price continue going higher. This guy, I don't know if it's going to work, but it looks as if it's a good one. Even though I'm sure it will not work because okay, it may work, sure, it's an uptrend, it may work. Okay, so find me the ones that worked, like this bearish order block here worked, this one here worked, this one here worked, all these ones that are working. So ignore the ones that failed. All right. Later on, as we go on in this training, you learn why they fail. Okay, you learn why they fail. All right, but find me other blocks that work. 10 examples of the bullish ones. Okay, 10 examples of bearish other blocks that worked out. Okay, and 10 10 examples of bullish other blocks that worked out. You may not even use a rectangle, just use whatever you like to show me the other blocks. All right, so that's just basically the assignment. Use So we're having 10 examples of bearish other blocks and 10 examples of bullish other blocks. So that's the assignment. Very, very simple, very, very easy. Try and submit before tomorrow. After tomorrow night, I won't collect this assignment again, or I won't mark it. You can submit it, but I won't really give you correction. So if you want me to give my correction, try and submit it before tomorrow night. All right. So basically that will be the end of our meeting today. Before we depart, does anybody have questions to ask me? Any last minute thoughts? Any suggestions?
CJ, I
Yeah.
have a question.
Yes.
So this other block now,
Mm.
if for example the the price action is going on the downtrend, right?
Yeah.
Then that up candle now shows up, and the the movement of the price just continues upward, but it didn't come back to test the other block. Does it still maintain it as an order block, or there's the possibility of it coming back later in future?
Okay. So we have a downward trend. Okay, Abby,
Yes.
and then we now went above the other blocks. Let's say another block is here, Abby.
uh, Yes.
Okay, so went above it like this,
Yeah.
and then does it validate it as another block like this?
No, sorry, it doesn't come back to test.
Okay, it
It
doesn't come
just
back.
continues
It
going.
just continues
Yes.
going up like that.
Yes. Yes.
Well, yes, it can still come back and act as an order block, but this time it will turn to a bullish order block. But it's only in certain scenarios, all right? It will become a bullish order block like this. Okay, but if it goes up like this and doesn't respect it, most times this guy is no longer a valid order block. But sometimes, once in a while, I can still use it. Okay, but
Okay.
we will learn that scenario. That will come when we talk about the different type of order block. So such an order block can be a reclaimed block or a breaker block. All right. So the price can still come down and it's now turned to a bullish order block instead. Okay, but that's not today's lesson. We'll learn more about it later. Another person. Hey, Bitcoin is flying. Oh, hey, I thought I would buy this thing. Told myself, oh, I cannot kill myself, Jerry. Another question. Okay, nobody. Okay, so with this, I would round up today's meeting. You guys should have a good night's sleep, and I hope to catch you guys here tomorrow by the same time. I'll drop the recording link in the group as usual. So thank you guys for joining me tonight. Good night.
Night.